Hello everyone, welcome back to our channel.
Hope you have a wonderful day. In today's video, we're going to talk about the difference between property investing and ETF investing based on our personal view and our experience as well. So yeah, let's get first started. This is not in any form of like top 5 or top 10 something, just from our personal experience as well.
Yes.
So the first one will be the difference between property and ETFs will be the liquidity of it. With ETFs, if it's an emergency side of it, you could actually just sell a portion.
Yes.
Partial of whatever it is amount. Say, for example, hey, you've got $10,000 invested and you need to sell maybe $2,000 for whatever emergency it is.
Yeah.
You can do that within a couple of days.
Yeah, you just sell it with the relevant unit of share that you're holding, and then you just pay commission and money will be in your bank account in a few days time.
Yeah. Whereas property,
you can't. You have to sell the whole piece of it. You can't just sell the
bedroom. You can't just sell the I just need to sell a couple of bricks or just the garage portion of it.
Yeah.
And you need to sell the whole entire lump sum.
Correct.
So the next one would be the starting point.
Yes, starting point for ETF, you can start from $5 for micro investment, or if you have more experience or you have more funds, you can start from $10,000 or $1,000. But for property, you will need a big lump sum, especially in Australia now. So many of the properties, let's say not the median price, maybe $500,000. You want 20% of it, which is $100,000 plus stamp duty, plus legal fee, plus a lot of other funds. So you will take a longer. I think I read something, you have to take 7 years to save up to pay a deposit for a house in Australia now.
On an average. So, yeah. And then the next one will be the transparency. What I like about the transparency on ETF is what you see in your screen, what you see in your statement, that is the true value of your current account.
Correct. You don't have to guess. But in the other side, for the real estate, the property, you have to put it into market, you have to contact agent, do appraisal. Even appraisal is not accurate because it's just the real estate agent's experience or their thought. But then once you have to put up to market and see whoever offer to you and don't know if you accept the offer or not.
That's it. And as also with investment property, there's a lot of numbers and there's a lot of, I guess, more like
admin
prediction. What is your cash flow going to be, or what is your income going to be? So, for example, if you buy, a property for again $500,000 with a rental income of $500 per week, that looks good. However, you haven't taken account of what if there's a repair? What if
there's no tenant?
There's no tenant. There's an upkeep of admin fee or marketing fee, or there's all of these agent fees that you don't see, and then the strata. There's a lot of this prediction on what your, I guess, transparency or how much is your true value of your property. So the next thing would be leverage.
For ETF, you can't leverage because you just
you can borrow money to leverage and hoping that the interest is actually a lot lower than what you're earning.
Yeah, I know some people, they do like withdraw equity from the home and then buy ETF, but just physical, the ETF not allowing you to leverage.
Yeah, it's not like whereas real estate, you can just go ahead to the bank. Hey, I want to buy a house. Here's a loan.
Well, they will have to assess your serviceability, how much you earn, how much you expect, your expenditure. Then they will give you how much you can borrow.
Yeah. The next one will be leveraging the interest rate. So with a property, let's say for sure, like every year, say if you're borrowing in a mortgage, you'll be paying this amount
of interest.
Yeah. Whereas in ETF, you don't have that availability.
No.
Well, that's as far as we know anyway. The next one would be the ability to physically add value on your investment.
Yes. Real estate does have it. Like in a house, you can do renovation, you can do subdivision, you can put a granny flat,
which is what we're expecting to do. For example, at the moment we have a backyard, and it's just unusable land, let's say, and we're looking at maybe we can put a granny flat in there, or maybe put a container or a cabin or something. So you can add value. You can maybe renovate the inside of the house. Maybe adding
change the
more rooms.
lighting, paint.
Yeah.
But ETF you can.
In ETF, not really.
No, you just put your money and then let them do the work.
That's it. This is what you get. This is the product. So the skill and experience can also be leveraged. Again, going back to that, hey, if you, let's say, like a handyman or so, you can paint the whole entire house yourself. You got if you're good at renovation, then you can do that yourself as well. So maybe you're good at subdivision.
Yeah.
Maybe you're good at doing the admin work for, let's say, submitting to a council. Hey, I want to subdivide this land to maybe 10 different townhouses or something. So your skill set, there is a lot of skill set involved. Whereas ETF,
no, you just have to do your research and pick whichever ETF that suits your strategy.
So depending on what type of ETF, for example, when we buy a property ETF, it's like, okay, yeah, it is slowly growing. We want that stability of it. And there's also like, hey, there's I guess the one that is really fluctuating.
Yeah, higher risk. So you just have to do your research. Depends on like, do you want a cash flow? Do you want capital gain? Do you want what else? Like high risk or lower risk? It's your choice. That's it.
Those are the I guess there's only a handful of options.
Yeah, but you still have to educate yourself, but not as much of hands-on compared to property.
Yeah. Next one will be the tax advantage. In a property, you get a tax advantage, for example, part of your interest repayment. If it's an investment property,
deductible.
Tax deductible. Negatively gearing is actually, in a sense, helping, I guess, the government incentive you to do that.
Yep.
Those are the two main ones that I know of.
Yeah, yeah. Any expenses related to the house, the property, you can claim tax, but ETF you can't.
Not really.
Brokerage, that's it.
So, I guess in the property side as well, it's good protection against inflation, because usually the house price usually goes up somewhat the same, or if not a little bit higher
more than the inflation.
A lot more actually, not a little bit. So less volatility against asset. So in property, what I like about it is like, hey, next door neighbor for the same
similar house.
Yeah.
Like, for example, if our next door, if 2-story, they sell at that price, yours should be similar price.
Yeah. So that's the transparency. I guess you're still waiting on, what is the similar style?
Layout,
look like from between yours to another property. Whereas in ETF, you're not really comparing.
No, you don't have to compare.
You can't really compare. It's like what you have is what you have.
Yeah.
Let's say if you put down $1,000 today, and then you've got another person put another $1,000 tomorrow, the price point alone will be different, and I guess the reward of that will be different between one to another. The other one would be, I guess, on ETF side of it, it is a passive investing. You sit and forget.
Yeah.
So
I think that's not as active, because when we used to have on properties, we have to take a lot of action. If real estate agent, they were not doing the job right, we want to change it. And if there's no tenant, we have to chase it. If what happened is missing, I remember one time we rented it, trying to rent it out for a few weeks, still no one renting. And they asked the agent what happened. They said no aircon. Then why didn't you tell me earlier? So we just install aircon and rent it out.
Yeah.
So that's a lot more work for you to do it in real estate.
We were overseas. Our property was, I guess, need a little bit of renovation. The agent didn't actually contact us until such time as we came back from overseas. The reason being was like, we didn't want to bother you, like while you're on holiday. This is an investment property. I need to have that rented out because I need the cash flow. So, I guess
the thing I feel like is real estate agent, they don't have the best interest of your property, because they earning the cash flow from you, because you're paying the management fee. But on the other hand, on ETF, because they are all listed company, so the job is to increase the profit, increase the share price, so they will work really hard for you.
Another one, extremely diversified when it comes to ETF. For a small amount of dollar value, let's say, as little as, let's say, $500 or so, you can buy hundreds of different type of businesses.
companies. Yeah.
Yeah.
You own them. You don't buy them. You
Yeah,
own
you
like
own
very
a
small
portion.
portion.
Yeah,
Yeah.
small portion of it. Whereas in a property, you can't really do that with $500.
No.
So the other one would be low entry and exit, as we just mentioned.
Yeah.
You know, as little as $5 or $500, and then you can liquidate that within a few days or so.
Yep.
In case within less than 5 working days,
Mhm.
you should be able to put that whatever you're selling or whatever you're buying in your account. Whereas the
Low
next one,
entry and exit
yep,
fee.
the next one
You
is very
mentioned.
liquid. You can break the share up bits
In
and
small
portion,
portion,
in
yes.
small portion, which
Yeah.
we mentioned beforehand. Easy peasy to do the tax return. Now, apparently, you could just get your statement.
Yeah,
and
because
just submit
normally,
it.
because when you set up ETF account, they already ask you for your tax account number. So whatever you pay, and then when you sell and also you receive dividend, they all have records.
It's already been recorded. Yeah.
Yes.
Whereas in property, you
have
sort
to
of
lodge
need
it,
to
okay?
lodge it. You need
Yeah.
to grab all your data. How much did you spend? What type of repair did you do? What is a depreciation type of repair? You know, the interest repayment. How much is it that you paid? Like all of that. Mostly, I remember we used to have to do that.
Yeah.
Every time we spend something like
put it in Excel sheet.
Yeah. So, what else is there? Franking dividends.
Yeah, frank dividends. Yes. So frank.
I don't know anything about it.
So some company, because when they make a profit, they pay tax already. So the franking, the franked dividend they pay to you. So which means portion of that you don't have to pay tax. That's it. So if the company is fully franked, which means that portion of the profit you receiving, the dividend, you do not have to pay tax. So that's the beauty of it. It's better than interest earning from a bank account.
So hopefully this type of information help you guys, I guess, choosing between the two type of asset when it comes to investing, whether it's property or ETFs.
Yep.
Coming from my experience, if you were to do it again, which one would you start off?
We just changed to ETF. We're not going back to property. No, I'm not.
So if you like this type of content, guys, don't forget to subscribe, comment.
See you next time. Bye.
Bye.